Artificial intelligence, AI, for CFOs refers to the strategic application of machine learning, generative AI, predictive analytics, intelligent automation, and advanced data technologies to enhance financial management, decision-making, enterprise performance, and long-term value creation. While AI was initially adopted to automate repetitive financial tasks, it has rapidly evolved into a strategic capability that transforms how finance organizations forecast performance, allocate capital, manage risks, support executive decisions, and drive business transformation. For modern chief financial officers, CFOs, AI is no longer simply a technology initiative, but a fundamental leadership competency that enables finance to become a predictive, data-driven, and strategic business partner. Leading executive CFO programs emphasize that the finance function is undergoing one of its most significant transformations since the introduction of enterprise resource planning, ERP systems. Advances in generative AI, large language models, machine learning, robotic process automation, RPA, and intelligent analytics are reshaping financial operations by improving speed, accuracy, scalability, and strategic insight. As organizations increasingly compete through data and digital innovation, CFOs are expected to lead AI adoption while ensuring governance, ethical use, cybersecurity, regulatory compliance, and measurable business value. One of the primary applications of AI in finance is process automation. Many traditional finance activities, including accounts payable, accounts receivable, invoice processing, journal entry preparation, bank reconciliations, expense management, tax documentation, and financial close activities, are highly repetitive and rule-based. AI-powered automation significantly reduces manual effort, minimizes human error, accelerates transaction processing, and strengthens internal controls. This enables finance professionals to shift their focus from transaction processing toward higher-value activities such as strategic analysis, business partnering, and executive decision support. AI has become particularly valuable in financial planning and forecasting. Traditional forecasting methods often rely heavily on historical trends and static assumptions that may not reflect rapidly changing business conditions. Machine learning algorithms continuously analyze large volumes of financial, operational, customer, market, and macroeconomic data to identify patterns and generate highly adaptive forecasts. AI improves revenue projections, cash flow forecasting, demand planning, budgeting, and scenario analysis by updating predictions dynamically as new information becomes available. CFOs use these capabilities to improve planning accuracy and organizational agility. Another critical application is predictive analytics and decision support. AI systems analyze historical and real-time data to identify emerging risks, business opportunities, customer trends, and operational inefficiencies before they become visible through conventional reporting. Predictive models support executive decisions regarding pricing strategies, capital allocation, mergers and acquisitions, working capital optimization, supply chain resilience, and strategic investments. By transforming raw data into actionable intelligence, AI strengthens evidence-based management and improves long-term value creation. Enterprise risk management is also being transformed through AI. Intelligent systems monitor financial transactions, cybersecurity events, compliance indicators, market volatility, supplier performance, and operational anomalies continuously. Machine learning algorithms detect unusual patterns that may indicate fraud, financial misconduct, cyber threats, or regulatory breaches significantly earlier than traditional control systems. CFOs increasingly leverage AI-powered risk monitoring to strengthen governance, improve internal controls, and enhance organizational resilience while supporting board oversight and regulatory compliance. One of the most significant recent developments is the emergence of generative AI. Unlike traditional AI models that classify or predict outcomes, generative AI can create reports, summarize financial information, draft management commentary, explain complex analytics, answer business questions, generate executive presentations, and assist with financial research through natural language interaction. Finance professionals can use AI assistants to accelerate reporting, support strategic planning, automate documentation, and improve executive communication while maintaining appropriate human review and governance. AI also enhances working capital and treasury management. Machine learning algorithms optimize cash management, liquidity forecasting, payment timing, credit risk evaluation, foreign exchange exposure, and investment strategies through continuous analysis of financial flows and market conditions. Improved treasury analytics support stronger liquidity management and capital efficiency, particularly during periods of economic uncertainty and market volatility.
Digital finance transformation driven by AI requires robust data governance. AI systems depend upon high-quality, accurate, consistent, and secure data to generate reliable insights. CFOs increasingly oversee enterprise data governance frameworks that define data ownership, quality standards, cybersecurity controls, privacy protections, regulatory compliance, and master data management. Without disciplined governance, AI implementation may amplify existing data errors and reduce executive confidence in analytical outputs. The successful adoption of AI also requires significant organizational change management and workforce transformation. Automation will eliminate many routine finance activities while increasing demand for professionals skilled in data analytics, AI oversight, strategic interpretation, business partnering, and digital leadership. Modern CFOs invest in continuous learning, digital literacy, AI governance education, and leadership development to prepare finance teams for evolving roles. Rather than replacing finance professionals, AI augments human capabilities by allowing experts to focus on judgment, creativity, ethics, stakeholder engagement, and strategic leadership. Ethical AI governance has become a major executive responsibility. Organizations must ensure that AI systems operate transparently, avoid unintended bias, protect confidential information, comply with regulatory requirements, and maintain accountability for automated decisions. CFOs work closely with technology leaders, legal teams, and boards to establish AI governance policies, model validation procedures, cybersecurity safeguards, and ethical oversight mechanisms that promote responsible AI adoption while protecting organizational reputation. AI also strengthens environmental, social, and governance (ESG) reporting by automating sustainability data collection, climate risk modeling, emissions tracking, supply chain analysis, and integrated reporting. AI enables organizations to combine financial and non-financial information into unified performance management systems that support stakeholder transparency and long-term sustainable value creation. The Global Competency Framework identifies digital skills, data analytics, leadership, business partnering, strategic thinking, enterprise risk management, governance, communication, and organizational transformation as essential competencies for executive finance professionals. Modern CFOs are expected to leverage AI technologies responsibly while integrating financial expertise, strategic leadership, governance excellence, and digital innovation into enterprise-wide transformation initiatives that enhance decision quality and sustainable business performance. In today's data-driven economy, AI for CFOs represents a transformational capability that extends far beyond automation. Organizations whose CFOs successfully combine artificial intelligence with financial stewardship, governance, strategic insight, and human leadership are better positioned to improve forecasting accuracy, strengthen enterprise resilience, accelerate innovation, optimize capital allocation, and create sustainable long-term value in an increasingly digital and competitive global marketplace.